Hello everyone. In this video, I wanted to speak about why have I stopped investing in fixed income instruments. I'll speak quickly about my journey, what learnings there have been, what is the current status of my corpus, and what are my future plans. So it has been almost 12 months since I started this journey. I started with a small amount of 10,000 rupees and invested in multiple platforms that are available in the market currently. These cover different kind of asset classes like bonds, SDIs, inverse discounting, P2P lending and whatnot. Quickly, my corpus grew from 10,000 rupees to more than 50 lakh rupees in just 12 months. And in this journey, I have been exploring other platforms as well across these asset classes. It's not that these platforms are not great. They might be great, but it is just too difficult to experiment and try at each and every platform. So I'll quickly come to the learnings that there have been in last 12 months. To start with the positives, the biggest positive that I think is the diversification option that fixed income offers to retail investors. As an investor, we just have three or four asset classes, that is equity, fixed deposits, real estate, and gold. Fixed income gives us the option to get better returns than FDs and more predictable returns, which in my opinion is the second biggest positive of fixed income, even if it is risky. So all the platforms keep on claiming that they are very low risk as compared to equity, which I'm not going to speak about, and let us assume that they are equally risky. Even then, the predictability that they offer, I think, is great. This predictability helps you manage and plan your finances far better as compared to the volatile assets. Also, the fixed income players have there been in the market for almost 3 4 years now, and now the government regulatory bodies are also recognizing these asset classes and platforms. So I think that right now it is a great time to invest in these because they are getting all sorts of approvals from the regulatory bodies, and the platforms are also kind of pushing better returns. I think that after 3 or 4 years, when these platforms or the market will get more mature, investors might not get as good returns as they are getting as of now. And the last positive is taxation. So most of the fixed income investments are taxed as per your income slab. And based on your income, this may or may not be a positive. If you are in the 30% bracket, well, too bad. But if you are at 0 or 10% bracket, then this can be a big positive as well. Coming to the downsides, in my opinion, the biggest downside for fixed income is the risk of the unknown. These are new assets, at least for the retailers. Of course, they have been existing for the institutional players for a long time. But as a retail investor, I'm really not aware what can go wrong. In theory, these products look great, but still, I would like to say that there is a risk, and that should be kept in mind when you are looking to invest in this. The second downside that I've come to realize is it is time consuming. So because fixed income keeps on giving you returns every month, every quarter, or every year, you need to keep on reinvesting this amount if you don't have a clear cut plan of spending this amount that you are receiving in terms of interests. And as my corpus kept on growing in the fixed income, this feature or this characteristic also kept on growing, and this is the reason that why I have stopped investing in fixed income. I'll come to this point later on again. And the third point is taxation. So if you happen to be in 20% or above tax slab, then you might want to allocate lower amount of your overall corpus to fixed income. So coming to the current status of my portfolio, as of now, I am not actively investing or exploring new platforms or new products. The reasons are, number one, I'm a bit bored of this now because I have been doing this for almost 12 months now. The second reason is it consumes a lot of time when the corpus is larger. The third and the most important reason is that majority of my fixed income corpus is now with Grip. Over the time, I have built great relationship with Grip, and they have a sort of PMS service. They are not actively promoting it because it is still in its pilot or trial stage. But I have invested there, and they now manage most of the amount of my fixed income corpus. Of course, there are still some amounts invested with Altgraaf, Amplio, Better Invest. Most of the platforms that I invested 12 months back, all of those platforms still have some amounts, but I'm not actively investing and reinvesting or exploring new opportunities there. Now, if I had to sum up my overall experience of last 12 months, there have been very few delays, far lesser than that I expected. So there is one India P2P platform where have been continuous delays, but the amount that I invested there is very small. Then the second delays happen from Better Invest. Apart from this, all of my repayments have been timely. There haven't been any issues. Even when SEBI cracked down on a few platforms like Altgraaf and Tap Invest on the issuance of NCDs, even those repayments have been on time. So overall, I'm quite happy. I'm not saying that I'll openly recommend this to everybody because it depends on your own risk appetite and your financial situation as well. But me personally, I have been very happy and I have been continuously growing my allocation in the debt. It's just that I'm not actively doing that myself anymore now. So, yes, that's about it. If you have any questions about my financial journey, please feel free to ask or drop a comment. If there is any product or startup that you would want me to review, please drop a comment and I'll be happy to engage. Thank you and have a great day.